Yo, what up? It's Teddy, Caravan Crypto, and today we're going to talk about volatility. The crypto market is extremely volatile, like ridiculously volatile compared to many other markets. But we're going to make sense of that today. All right. First, let's look at price. Bitcoin's at 9,600 bucks. If you watch my video from yesterday around this same time, which is 8:58 a.m. In California. I'm in Sacramento. Um, Bitcoin was at 9,700 bucks, and now it's at 9,600. You know, Ethereum was at 243. Now it's at 241. This is like really common, right? This is not strange, okay? Uh, Movements, a difference like that is not strange in any market. But let's look at what happened overnight, though, because it's easy to say, that 24-hour period, that the price difference is not that big. But let's look at what happened yesterday. So yesterday, Bitcoin, this is a 33-minute chart. So each one of these little candles represents 33 minutes of time. And let's go to the 10th, which is yesterday, right here. Boom, at 8:57 a.m. 10th of June. It was at 97.61, and it actually went here. Let me make this bigger. It actually went from 97.61 at 8 a.m. It was in this range right here, 97.68. It went up to 10,000. It even hit, I think it hit 10,013. Came back down, bounced around in here. It tried to come back up again to 99.80. Came back down, and then boom, sunk down. At 95.13. And so, we use the BK Boss method. It is a patented method for trading indicators, and these are moving average lines. And to keep it simple, well, a moving average is taking the average of the last however many candles that the chart produced, right? So I think this is the 7 moving average, this white line. And we say if the white goes under the blue, you know what to do. And if the white goes over the blue, you know what to do. But essentially, this white line is dictating the action you should take at that time of crossing over the blue line. This blue line represents, longer money. And so if the white is going over that blue line, you should probably get in. And when the white goes under that blue line, you should probably get out. So, if we got in at 9,700, we would have got out at 98.03, which is like a cool, $100. However, this is just on the 33-minute chart. If we look on the 343-minute chart, you get indicators that give you a lot more room to play. This would be 9,400 is where you would have got out, and you'd probably still be in right now. Maybe 96 is when you dump out. If you just wanted to get out right now. But no trading method is going to be 100%, but we've used the BK Boss method and we love it. Go to Google and type in chart like a boss for the playlist on how to use it. But anyway, we're talking about volatility today. Let's look at Bitcoin's volatility. It's pretty friggin' volatile if you ask me. So let me get into how these candles work. All right. So this is a 343-minute chart, and what that means is each one of these candles is a 343-minute time period. Okay, so when we look at this big red candle right here, or let's start with the green candle. So with the green candle, it started at 97.18, right, and it went all the way up to 10,229. So this green candle represents that the price went up because it's green. So that means when you know that it started at the low end and it finished at the top. So at the beginning of the 343-minute cycle, mark, it was 97.16, and at the end of the 343-minute mark, it was 10,225. Now in between these this candle, you have these little wicks, right? If you can see this little green line right here, this is called a wick. Now this wick represents how the top wick represents how high the price went within this 343-minute interval, and it went all the way up to 10,405, even though it finished the 343-minute interval at 10,225, right? And this little tiny itty bitty little bottom wick means that it went as low as 97.08 for the bottom wick, for as low as the price went, right? All right, so then this red candle next to it means that it started here and it came down, it finished downwards at the end of the the following 343-minute cycle. This green one says it started right down here and went up, and then this big red candle means it started up here at the beginning of the 343-minute cycle, and it finished all the way down here at 9,491. And 343 minutes, so like these four candles basically was like a day, right? Like a 24-hour period. We go from the 1st of June 2020 1552 to the 2nd of June 2020 426. So not quite a day, but a long period of time, right? Like we're talking more than 12 hours to do this. And look how volatile it is. Like, let's say you bought right here at this 97.15. You made $500 on one Bitcoin. And if you sold at the top, you made $800. But then if you held on to it, you crashed down. And look, if you bought here at 97.16, you lost money at 94.88. But then if you waited 2 more days, you'd be back up money. And if you waited a few more days, you'd be down money. And you'd be really down over here, you know what I mean? Or you might even you'd be really down over here. And then if you wait a little bit more, you'd be up again. And now we're at this new 343-minute candle at 95.30 is where the price is. So that's how volatile the crypto market is. But that's okay, because traders would make money in this volatility. You make money on the swings. It's if you look at the housing market, it's a very long play in terms of swings, right? So people buy at the bottom of the housing market and they sell at the top, all right, and they get out, and then they wait for the prices to come back down, and then they buy again. The common mistake a lot of people make in the housing market is they buy in the same market that they sold in. That would be like me I bought Bitcoin for 10,000, went to 20,000, I sold it, and then I turned right back around and I bought while Bitcoin was still at 20,000. Let's say I just decided I sold my Bitcoin and made my money, let me go buy Ethereum and try to make money like that. If I sold at the top of the market, obviously the market is going to come back down, and then even if whether I bought Ethereum or Cardano or whatever I bought, I'm going to lose money on that because I'm buying in the same market that I sold in. Sorry, my mic fell. Sorry, we also got alarms going off on these indicators. TradingView is great. You can trigger alarms and all kinds of stuff. You can watch multiple charts at the same time. And if you can see this trend here, you see that these charts tend to follow Bitcoin's patterns. We have this long red candle, and each one of these coins here have these long red candles at the same exact moment. These are the same time intervals, this is the same time frame, and they each have these long red candles, because Bitcoin, being that it's the vast majority of the market cap, if we look at Bitcoin's market cap dominance, it's 64.8%, so 64.8% of the market is taken up by Bitcoin's market cap. So if Bitcoin, being that it's the largest market cap asset, if that tanks, it tends to drag the rest of the markets with it. And when Bitcoin goes up, it tends to drag the rest of the market with it too. That's why and they call it pegging. These other coins, these altcoins, which alternative coins are any coin that's not Bitcoin. Alternative coins are pegged to Bitcoin. All right. So, all right, just to give you a frame of reference, if you're not familiar, let's look at gold, right? Let's look at gold in the last 5 years. As a matter of fact, we'll even look at Bitcoin in the last 5 years. I hope TradingView gives me that distance. I'm not sure if it goes all the way back to 2015. I'm pretty sure it does. Oh, it does. Great, cool. So we're gonna look at Bitcoin in the last 5 years and compare it to gold, and we're gonna do some math. All right. I know I'm 10 minutes in. I know these are long videos that I make, but I try to be thorough about it. So I hope you could bear with me. All right. So look, gold. Now gold, look, it's not the sexiest asset to get, but precious metals in general are looked at as stable hedges against volatility. They're kind of like bread, butter, and eggs for investing. They're not special dishes like filet mignon or fettucini alfredo or something like that. But they're normal parts of daily life, right? And so in investing, what it means is it's not going to get you stupid gains, crazy gains, but it also won't get you stupid, crazy losses either, right? And that's why people like gold. And over time, gold has tended to increase very steadily, mainly because of inflation of the US dollar, but we're going to get into that. So anyway, if we look over here, a kilogram of gold, which is 1,000 grams of gold. Some of you might know kilograms from other commodities, but a kilo of gold in June of 2015 was $38,000, right? And it had this little journey, came down to $35,000, which is like what, maybe a 10% loss, maybe even down here at 34,000, it's still what, like 13% loss. Like it's not that crazy. And then it climbed up. If we go to June of 2016, we're looking at a $42,000 kilogram. It came back down to 36, which still, like, from 42 to 36, like, what is that, like, maybe 20%, maybe, and then it did this up and down fluctuating movement, like all markets do this. Came back down to 38, which is where you bought in over here in June of 2015. In September of 2018, it would have been the same price, and then boom. We're going to run, and we're going up and 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 up to what we have today, 55,836. Now let's do this. Let's do a percentage increase, percentage growth calculator. And sorry, I should have pulled this up, but I really didn't even expect to do this. We're probably going to do this a lot today. Sorry, I don't even like that one. Let's go to this one. Okay, so we have our initial value of $38,000 and our final value of $55,000. Sorry, 55 million. Or 5 million. The difference is an increase of 44%. Like, what? 44% on money? Yeah, boy, what? I put in $1,000 and I got 1,400 back. Ballin'. It's not that sexy, guys. I'm being very sarcastic. All right. Now look, let's look at Bitcoin. All right, before we get to Bitcoin, because I want to show you the volatility of the crypto market. Let me look at Facebook, for example. Okay. Now, like I said, gold not as sexy as other things you could invest in, right? The gains are not that crazy, right? Now, let's look at Facebook. Facebook. 11, 17. Let's go to 2015. So that way we're on that exact 5-year mark, and we're not cheating gold, because some people might have an issue with that. All right, June 1st, 2015. We're looking at an $82 Facebook price, and look, $82. Man, it hits $131. What? That's like a 50% increase, a little over. It keeps going. It doesn't stop. You know, and we're talking about February 2018. We're at 176 bucks. Whew, you think it would stop there? No. $209 in July of 2018, right? Breaking that $200 mark. And then it came all the way back down in 2018, December 2018, 124 bucks. Some people would consider that, you know, what's 30% of 200? It's like, you know, a $60, right? So, you know, it's like a little bit of a steep correction, right? A correction is a 30% price difference, you know, from the top, right? So, some people would consider that a correction. And if it leveled off around here, you know, this might be a good time to get in, especially if you see it climb back up to like 150 bucks right here. Might be a good time to get back in. And sure enough, it sure was. Boom, come back up to 195, hit that 200 mark. Yup, hit 222 bucks in January 2020, and then we had this terrible day in the stock market and in crypto. Oh man, it was cringeworthy. A lot of shaky hands got shook out. A little bit of my hands got shaky. A little bit. 154 bucks, came back down to 149 bucks, and now we're sitting back at $228. Okay, so look, if we're going from where is it? 82 bucks. $82 in June of 2015, sorry. Let's go to our percentage growth calculator. We got $82 and we got, I believe it was 222 bucks. Or maybe I'm wrong. Hold on. Let me get actual facts. 228. My apologies. All right. 228. 178%. What? That means I put in $1,000 and I get $2,780 back. Boy, in 5 years. Wow. It's amazing. That, man, what? Let's look at Tesla. Tesla had an incredible run this past year, really. You know, I mean, 2015 to 2019 is pretty boring if you ask me. We're gonna take a look at it anyway, just to show you. This is more of like one of the extreme examples in the stock market, right? All right, so we're in June of 2015. We're looking at a $262 Tesla stock. You know, had a little dip here, down to 151. You know, a lot of people might have been worried. Might have been a good time to get in, which I think it was. And boom, hit this run. Oh, we're going up. Then we got some sideways action, damn near all of 2017. June of 2017, all the way to freaking January 2019. Sideways, boy. Sideways is when we're not really going up and we're not really going down. We're just going sideways on the chart. This chart is just squiggling off to the side. That's why they call it sideways. And then 2019, we start to take a dip back down to that $185 level, which, you know, we hit here, and, you know, we were a little bit below that over here in 2016. And then it's September 30th, 2019, this thing takes off like a rocket. Whoop, because it was doing rockets and stuff, or at least, you know, I think that's when they came out with the Roadster, the 600-mile range. It's the fastest car on the planet, and it's electric, runs off, and it costs like $12 to fill up, quote unquote, fill up or recharge. So yeah, it hits $901. Are you kidding me? Are you kidding me? $901 comes back down to 427. This would be considered a bear, but this was in March, that same crazy day in the stock market, crazy number of days in the stock market. And then they came back up, man. And now, shoot, dude, if you bought here at 427, made a quick double up, super fast double up at 989 right now. And I wouldn't stay there. Be very wary about staying in the stock market right now. We have very inflated numbers. It's all BS, yo. It's all inflated stuff from pumping into the stock market, all this fiat money that gets printed. All right, so anyway, 622, $267 to $990. I know you're thinking like, damn, Teddy, What you gonna say about that, Teddy? Look at that. $909. 246%. I think, man, it's crazy. I put in $1,000, I get back $3,460 in 5 years. What? You mean I turned my $1,000 into $3,460 in 5 years? That's crazy. That's big money, boy. Is it? Is it? I mean, look, man. This is a great investment. You made money on this. You do. I mean, look, in the stock market, you do 246%. That's crazy. That is insane. It's nuts. It's like unbelievable, right? All right, let's look at Bitcoin. You thought those numbers were good? Whew, whew. Hold on to your britches. All right, look. We're gonna go to let's find June of 2015. Okay, June of 2015. We're looking at a price of what does that say, man? $218 for a Bitcoin. And I think June of 2015, it was after the first halving. Was it? Yeah, it was after the first halving. I mean, second halving. Sorry. All right, so June of 2015. So what a halving is the block reward gets cut in half. I'll explain that later. We're gonna get into that. Okay, look, I'm sorry for these long videos, yo, but man, please just rock with me, okay? We're trying to make a thorough explanation here. All right, so June of 2015, $218, and it's sideways, pretty sideways. You know, actually, it climbs up to. You can't see it on the chart here, but it climbs up to $701. Okay, and it goes up and it goes up, and now we're looking at June of 2017, and it is at $912. Is it? No. Sorry, was it March 2017? No, June of 2017. We're looking at, yeah, I figured it was way bigger than that. I remember, $2,300. So $218 in 2015. If we go back here, 2015 of June, we're looking at $218. 2017 of June, $2,019. I mean, it's just crazy. Okay, we're not done. 2017, man, blasts up to 19,000 and what is it? $19,943. Crazy, bro. It's nuts. It's insane. Okay, we were at $218 in 2015, and in 2017 December, $19,883. Dude, I'm saying it correctly. I know what you're thinking, brother Daddy. What are you talking about? What are you talking about? 19,000? What are you talking about? Yes, I'm saying it correctly. Okay, I am saying this correctly. This is real. 2015, we're at $218. Okay, and up here is where it went at the end of 2017. 19,000. I mean, I can't make it more clear, man. 19,880. All right, let's just do a percentage increase from there. All right, we'll measure it. Okay, so we're looking at bang right here. All right, right here on this thing. You can't even pinpoint it because it's so tiny. To here. It's 945 days. I mean, you're waiting 3 years for this to happen. But the percentage increase, I don't know if you can see it here, man. 7,798% increase. Okay? 7,798% increase. Okay, let's do the math here, okay? And we're not even at the 5-year mark, but I'm gonna show you why it's volatile. But let's say we had $1,000 divided by, sorry, let me do this on screen. $1,000 divided by 218, you would have got 4.5 Bitcoin, which would have been like, it's cool. I got like 4.5 Bitcoin. But multiply that times 20,000. Sorry, I'm tripping. Multiply that by 20,000. $91,743 from a $1,000 investment. These are real numbers, folks. Real numbers, my guy. So anyway, so look, let's do the flip side, because this only was here for like a few days, and then boom, from down here, it's looking bad. So it took 945 days to go from there to the top, and it only took 396 days to go from the top down here to the itty bitty bottom, where Bitcoin was at $3,522. You know, you lost 82% if you held on this whole time. But man, you should have just sold it. Should have sold it at the top here. Even anywhere down in here, you'd have been rolling in dough from your little $1,000. Come back down to 3,522 and go ahead, take that 70 racks, 80 racks, buy back in right at the bottom here, and then you would erode. So this is how volatile Bitcoin, I mean, you know, crypto is. It went from down here all the way up here, and then all the way back down here. And then what? We're not even done with the 5 years yet. All right, folks, we're not done with the 5 years. Then you would have came from down here if you bought. Okay, if you bought it. Well, where's my measurement? If you bought it, and you would have came back up here last year, it would have took you 151 days to do another 286%. That's what Tesla did. It's better than what Tesla did in 5 years, and it would only took you less than 6 months to pull that off. Like, you know, 7 months to do that here in the crypto space, right? And then what happens? We come back down to, you know, at the low point. It was like down here, you know, minus 55%. I mean, you're still money up. You're still money up if you bought back down here. And then from here, you know, you're coming back up to here, you know, make another 60% in 92 days. And this right here, I believe this is March. Yep, March. So this is like the terrible time in all markets, right, of 2020. This is where we're at. And look, man, you know, it's just part of the game. This is where it's at right now. Here's what's happening, right? This is a very, very, very new market. It's a new field. It's a new frontier of technology. Literally everything is going to change because of blockchain and because of cryptocurrencies. There's so many things you can do that you just wouldn't be able to do with any traditional finance system that isn't welded in and integrated seamlessly with technology. Okay, and so because of that, it's a very tiny itty bitty market, and so it can move very violently very often. So, you know, if you're an active trader in stocks, you are going to love crypto because the swings happen so many times, so many more times than in the stock market. Okay, the opportunity for you to sell high and buy back in low is tremendous. There's so many of those opportunities, and we're just looking at Bitcoin. All of the other coins have even greater fluctuation than this, right? All the other coins, and so, you know, it's volatile. Long story short, here let's look at Verge coin. Just to even more reiterate just how volatile this thing is. Okay, this thing's very volatile. So if we look at Verge coin and we look at down here in December of 2017, and we go all the way up to December of the 4th of December 2017, and we go up to the 18th of December 2017, you're going to see a price increase of 3,928% in 14 days. Yo, this is insane. This is at the very top of the wick, right? All right, let's do the math, man, because I know you're like, oh man, Brother Teddy, it sounds crazy, but what does that actually mean? All right, we got $1,000 divided by the price of Verge coin, which was 0.0078. Let's just say 79. Okay, cents, you would have got 126,000 Verge coin, which would have only been worth $1,000 on the 14th. On what is it? What's down here? The 4th of December, 2017. And you would have took that, and if you sold it at the very top at 0.309 cents, so from a fraction of a penny to 30 cents per coin, your $1,000 in 2 weeks would have been $39,113. And Verge coin is a coin. We in Verge coin today. That's one of the charts that we on right here. Verge coin. We're playing that today. 2 years later. You know what I mean? Almost 3 years later. Well, you know, 2.5 years later. We're still playing it, man. It's not like this is like just some dumb coin that nobody cares about. But then we look at where it came down from. All right, so you started up here, and in 49 days, we came back down to 26 cents, right? We're back down to 5 cents, okay, in 26 days. In 49 days. 7 weeks. You know what I mean? That's what it's like. That's what it is. You should sell at the top. Dump it out at the top. You know what I mean? And get out of there. When you're at the top of the market, you know, you gotta know how to time these things, and you don't have to time them perfectly, but you have to figure out when you've made enough and you're good, or how to piece out, you know, what do you call it, dollar cost average out of a coin, so that you can, you know, keep your profits, right? All right, let's move on. So long story short, look, man, crypto is extremely violent movements. It's extremely versatile. I mean, volatile, and it's also versatile. But there is a reason why you should hold on to coins. Well, at least Bitcoin anyway. You should hold on to that long term. I don't know what the other projects are going to be like in 10 years, in 20 years, in 5 years. But we have a pretty good idea of what Bitcoin is going to look like, because of the scarcity of Bitcoin. So there's this thing called the block supply halving, right? So in the beginning of Bitcoin in 2009, it released, I think it was 50 Bitcoin per every 10 minutes, right? And so I think it came out to, let me see, let's do the math, right? So we have 24 hours in a day times 60 minutes equals 1,440 divided by 10. So 144 opportunities for each block of data in the blockchain to release as a reward for solving these complex algorithms. And I know I'm losing you. Go to another video I made about what is Bitcoin that kind of explains all this. But you know, there's 144 opportunities for these blocks to release 50 Bitcoin. So that came out to 7,200 Bitcoin per day, right? And dude, it was way more than that in 2009. I think this is more like a later or 2010 number. But anyway, so each day, miners all around the world, which there weren't a whole lot of at the time, were sharing 7,200 Bitcoin per day, right? And that was cool. But then 2 years later, that number cut in half. So per day they only were doing 3,600. But actually the difficulty for mining that increased by a factor of 2, right? And then 4 years later, in 2016, it got cut in half again. So now we came down to 1,800 Bitcoin, and then just recently, May of 2020, it got cut in half again. And so now we're dealing with that. 900 Bitcoin is what everybody all around the world is sharing every day. And it's going to continue like this until 2145, which is why that number is here. 2145, when the last Bitcoin can be mined. And then there will be no more Bitcoin to mine. Another thing to keep in mind is that 6 million Bitcoin has already been burned off, because back when it was really cheap to have Bitcoin, people really didn't care about it. People didn't believe it was going to increase in value that much. And so, some people just kind of threw it away, tossed it out, or left it on a computer, or didn't care about it. And so we're really working with 15 million Bitcoin in it that could ever be in existence in the circulating supply. Satoshi Nakamoto has 1 million of those. So now we're only talking about 14 million Bitcoin that could ever be in a circulating supply. And that number is stretched all the way out to 2145. Yeah, 2145. When the last Bitcoin will be mined. If you think about it, there's no other asset that could do that. Gold cannot be like that. Diamonds couldn't be like that. We don't know how much gold is out there. We don't know how many diamonds are out there. And in terms of US dollars, they keep printing that and printing that and printing that and printing that, so that there is not a scarcity of these assets like there is of Bitcoin. And this is contributing to Bitcoin's price fluctuation being so volatile. The fact that the supply demand ratio, right? So you have supply and you have demand, right? The more the supply, or the more the demand is, right? The more valuable the supply is, right? However, if your supply stays constant and your demand keeps increasing, then the value of that supply exponentially grows. This is why you have Bitcoin being fractions of a penny 1 year, and 7 years later being worth $20,000 each, right? And at some point we have to find what's called equilibrium pricing. Equilibrium pricing is where the market decides the specific price that we agree on is the price for a certain thing. So with gold, we know that around this $1,500 mark, gold is where it's supposed to be. If it goes above $1,500, then it's expensive, and if it goes under $1,500, it's cheap. But $1,500, is generally agreed to be where an ounce of gold should be, right? Oh, these are kilos, sorry, but if an ounce of gold though would be 1,500, this is how we would measure it, right? Okay, so with this block halving, we don't know yet what the equilibrium price of Bitcoin is. It's not 20,000. 10,000 is still considered cheap. We have a lot of people entering the market at 10,000, buying in. A lot of investors, in the investor class, getting in at 10,000. So 10,000 is considered cheap. People are saying that it should go way past 20,000. But we don't know. We'll see. We'll see where it goes, right? Now, so look, with this Bitcoin having the quantitative hardening of Bitcoin, which is like the increasing value of Bitcoin because of the scarcity of Bitcoin, what does this mean socially and politically, right? We work in a system, like this financial system is set up in a way where it relies on debt, right? So the Federal Reserve creates cash, just to put it very simply, right? Creates cash and then lends it to the U.S. government at a certain interest rate, and then the U.S. government disperses it to banks at a certain interest rate, and the banks disperse it to the citizens of the United States at a certain interest rate. And then you also have this money being used to run government, which the government doesn't necessarily have to produce a surplus, right? Like most governments don't, right? They produce a deficit each year. But this money still comes in, it still gets printed, and it still gets distributed all throughout the United States. This is decreasing the value of the dollar, right? Like every year. Okay, because there's more supply than there is demand, right? So the value of each dollar printed devalues the value of the previous dollars that were printed before it, right? And not only that, but there's not a whole lot of money being printed, right? So think about it, like you're using cash on a regular basis, but it's digital already, right? You rarely are seeing your dollars, unless you deal with a cash business. You're rarely seeing your dollars, right? Now look at this visualization. I'm gonna leave this website in the description, but this is a visual representation of the money supply, right? All right, so there's $35 trillion in money circulating around the world, right? However, only 7% of this money is actually physical. Okay? We're digital anyway. We're digital anyway, right? And so this is why I see crypto replacing cash. Because if you thought it was easy to print money when it was physical, imagine how easy it is to print money when it's digital, right? And if you don't think we're going to the digital dollar and the digital wallet bill surfaces in the U.S. Senate. March 24th, on the stimulus bill that was released, had verbiage talking about the digital dollar and digital wallet. You know what a digital wallet is? You know where this term came from? This term came from the Bitcoin white paper. These addresses that are used to hold, or account for Bitcoin on the blockchain are called addresses. I mean, they're called wallets, sorry. They're called wallets. So you have Bitcoin wallets, Ethereum wallets, Litecoin wallets, Monero wallets. Each person, when you create a wallet on an app, it's called a wallet. And then your digital money would go into your wallet. This is the terminology that they're using to describe the digital dollar, right? This bill offers a definition for digital dollars as well as for digital dollar wallets, and provides the provision for a pass-through digital dollar wallet with the mandate for all member banks to open and maintain digital dollar wallets for all persons, including those eligible to receive the stimulus. This was in the March 24th stimulus bill. There was a lot of questions and feedback and even backlash about going to a digital dollar, which I'm really not against. But there was a lot of that, and so they took it out of that bill. But this is Forbes. This isn't no rinky-dink site. Their focus is finance, and they did an article about this digital dollar because Forbes actually released a 22-page paper being bullish on just Bitcoin and cryptocurrencies in March, right? And so this digital dollar thing, I mean, it bolsters their position advocating for digital currencies in 2020. All right, so well, there's all that, and look, man, you can feel how you want to feel about the politics and the societal impacts, the socioeconomic impact of what we're talking about here. But in business, it's important not to be emotional and to look at the facts, because with the right information, you'll be able to make the best decisions. All right. So we'll move on. Another thing is that most of investors, you have inflation, right? Inflation is roughly 3%. I think this year it's actually going to increase because of all the stimulus spending. And what inflation means is that if you have 1 year where you had $1,000, right, and you could buy whatever you could buy with $1,000 that year, the following year, because of inflation, that same $1,000 can only buy you $970 worth of stuff because of inflation, right? The commodities around the world and gas prices and all this stuff are adjusting to the value of the dollar. 80% of the world's currencies are backed by the US dollar, which is not backed by anything. And so if you think that, a cryptocurrency needs to be backed, look at the US dollar. It's not backed by anything, and it costs nothing to make. With at least, cryptocurrencies like Bitcoin, it costs $6,000 in a week to produce one Bitcoin, right? So there's at least a cost associated with it. And so, we're talking about inflation here, right? That's why a lot of investors are looking for an alternative to cash, because they may not want to be in the housing market because it's going to crash. They may not want to deal with commodities because, the world is changing. Look at what happened to oil and whatnot. They can't really store gold. Like, it's not realistic to store gold. And they still operate in a digital framework for the economics of, the entire world. Also, the other thing is that with storing gold, you may have to leave it in the possession of somebody else who you have to trust. But with crypto and Bitcoin, there's value there. You don't have to, you can travel freely throughout the world without having to fork it over or declare it to anybody. You don't, you willingly can omit that. You might be breaking some laws in some places, but you don't, there's nothing compelling you. It's not like they're gonna find, your gold bullion in your bag here. It's not the same as that when you're using Bitcoin and cryptocurrencies. You can literally have an email with your private key and access your wallet anywhere else in the world, right? There's just a lot of upside for people who don't want to be into a physical asset at this point in time, want to remain liquid, but also don't have a trust for the US dollar in terms of its solvency and it maintaining the value that they needed to maintain over a period of time, right? And so people are looking, in the investor class, they're looking to crypto. The other thing is, in terms of market cycles, we are at the beginning of a brand new market cycle. We just hit a halvening, just like that. What happened over here was a halvening, and look at the run-up we had. And Bitcoin has had a number of run-ups and increases in prices that were seemingly parabolic. Nothing like what happened in 2017 just yet, but we almost had a close second with what happened in 2018 or 2019, I should say. So we're at the beginning of a market. Getting in right now, you have Fidelity, E-Trade, Forbes, JP Morgan Chase was so against. They're so anti-crypto. Jamie Dimon, a liar, he told the whole world that if he caught any of the people working for him trading crypto, buying crypto, that he would fire them immediately. Turns out they had $24 million worth of crypto in their assets. Turns out his son bought crypto. Turns out he bought crypto. And turns out he's now banking the two largest cryptocurrency exchanges in America, right? And so, you have a ton of people who have been in this space or are getting in this space now at the beginning of this next bull run, right? Well, I don't know what's going to happen. I'm not no financial advisor. I'm just some guy on YouTube. But I really encourage you, even though that this asset is very volatile, even though it's a new space, even though it's new technology, even though there's a learning curve associated with it that I encourage you to explore and become familiar with, even though all of those things, I don't see another asset that can be used as a currency that you can control yourself, that isn't owned by a bank, an individual, an institution, or a government, or a group of that. I don't see anything else with those attributes that can carry us into the next phase of economics, in the world, right? And the next phase of technology in the world. And so, subscribe, follow this channel, please. Comment below. You can argue with me. I would love to hear your feedback, and let me know if I got anything wrong. But stay tuned, man. It's gonna be a bumpy ride. It's not gonna be easy. It's gonna be bumpy, but I think it'll be worth it. And so, yeah, thank you for staying with this video to the end. I hope I answered your questions. But yeah, peace.